Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock and how they have three huge upcoming catalysts which should ignite their overall share price. In this video, we will be analyzing one article and going over the three most relevant catalysts, so buckle up and stay tuned. Don't forget to go and annihilate that like button, subscribe if you are new, don't forget to become a member of this channel for more videos just like this one, and without further ado, I say let's dive right into today's stories. Palantir Technologies is a big data and analytics company that serves both commercial enterprises as well as government clients, and they also specialize in artificial intelligence as well as machine learning. If you didn't watch the last video, essentially we talked about how a Morgan Stanley analyst downgraded Palantir stock to a sell rating from a hold rating, but they increased their price target from $8 up to $9. We also previously talked about how Kathy Wood of ARK Invest bought around $10 million worth of Palantir stock, and how various analysts, professionals, institutions, and investor celebrities are all divided on this company. But putting all of that aside, let's talk about their three upcoming catalysts. The first one is going to be a contract with the UK National Health Service, also known as NHS. And this is going to be a data procurement contract, which is worth around £360 million, and it's a 5-year contract, which is expected to be rewarded on September 28th. So this is going to act as a huge catalyst for Palantir Technologies. The next catalyst that we want to keep an eye out for is their eligibility to be included in the S&P 500. And if they become a member of the S&P 500 index, that is going to cause loads of money to flow into this company due to various funds and ETFs that track the S&P 500, which means loads of money is going to pour into Palantir Technologies, thus increasing their overall share price. And they can achieve this if they bring in a profitable quarter for their Q3 2023 results on a GAAP basis, or a generally accepted accounting principles basis. And the last catalyst will be their earnings report, which is anticipated to be released somewhere around November 6th of 2023. Because this is going to show how they are growing their overall earnings and revenue, which should cause their share price to absolutely explode, making Palantir Technologies a fantastic buying opportunity. We also previously went over how a Bank of America analyst said that this company should be worth around $18 per share, even though currently they're trading at around $15. Right now, Palantir stock has a hold consensus among professionals and an average price target of $13.32, which implies a downside of around 12.3%. However, I would disagree with these analysts because clearly I'm going to be more bullish. Palantir Technologies, according to 5-star analysts, is anticipated to be worth between $18 to $25, as you can see on screen here. Daniel Ives, which we've also previously talked about, has a price target of $25, who is a very reputable technology analyst. But let's not just talk about if this company is undervalued or not. Let's see if Palantir is a good buying opportunity based off of their PE ratio or their price to earnings ratio. Because if they are a good buying opportunity, this could allow investors to get a phenomenal price on a very aggressive growth stock. Palantir Technologies has been in our regular news updates ever since they DPO'd back in 2020, and in 2023 the stock price has absolutely surged due to investor optimism surrounding artificial intelligence. After hitting around $20 per share, the company dropped by 25% to around $15, which is what they are currently trading at. However, the current dip in their overall share price could offer investors an excellent buying opportunity if you are a long-term investor, or at minimum, add this company to a watch list, and always remember to do your own research. Palantir Technologies has two main revenue segments, which would be their government segment as well as their commercial segment, and lately the share price has absolutely exploded after their previous earnings report, or honestly ever since the beginning of 2023. And this is despite a tough economy. Even over the last 2 years, the economy has been very volatile. Palantir has brought in very impressive revenue growth rates and CAGRs, and since they recently launched their AIP platform, which is designed to integrate large language models into customers' private data, which is seeing very impressive demand, this should lift their share price even further upwards. On top of that, even though for the current year they're anticipated to bring in a 16% CAGR, that is anticipated to increase to around a 19% CAGR over the next year, meaning in 2024, and this revenue increase is going to make them even more profitable. But you may know all of that already. Let's talk about some stuff that you probably don't know, and that is how they are going to increase their overall earnings at an unprecedented rate. Every young company normally focuses on growing their overall revenues because the faster they grow their revenues and lower their expenses, the faster the company can turn a profit. Luckily for us, Palantir Technologies is already profitable on a GAAP basis or under a generally accepted accounting principles basis, and if they bring in profitability for the third quarter, they are going to be eligible for inclusion in the S&P 500, which is a catalyst we already talked about. However, here's some things that you probably don't know. Palantir's revenue compared to their research and development, their SG&A, as well as their sales and marketing expenses have all decreased on a percentage basis, which is very positive. Essentially, as revenues increase, these expenses will make up a lower percentage basis of their overall revenues, and that's exactly what we would want to see as investors because it's going to make them more profitable, especially since their revenue growth is outpacing their overall expenses. So this is very positive news. Palantir is currently at a very pivotal financial point right now to where their earnings growth is set to dramatically explode and accelerate as they continuously increase their overall revenues. For instance, analysts currently believe that Palantir's EPS or earnings per share will grow at an average rate of 66%. Which means that investors should witness the stock rapidly grow into their overall valuation on a PE ratio basis. This is very positive news, and it means Palantir is growing into their overall valuation, thus lowering their overall stock price premiums. In fact, professionals believe that Palantir's 2023 earnings per share will come in at 22 cents on the positive side, valuing the company's PE ratio or price to earnings ratio of 73. And although this is very high, ideally we would want this below 50, we have to discount this from their overall earnings growth rate because at face value, this seems to be extremely expensive, but when we compare their PE ratio to their growth rate of 66%, we can then use the PEG ratio, which offsets their price according to their earnings growth, and that puts them at just 1.3. Ideally, anything below 1.5 indicates a very good buying opportunity. So you could argue that Palantir stock is attractively valued right now because of their future growth potential. This means that investors could take advantage of the recent dip that we've seen in their overall share price, meaning that it could be a solid entry point right now for investors who have yet to invest in this company if you plan to dollar cost average. We also have to keep in mind that these metrics are 12 months out, so you could potentially wait 12 months before you decide to invest, but if you are a long-term investor, nibbling at the company right now could be a very good opportunity. You should also keep in mind that Palantir Technologies is just scratching the surface of their overall AI space. Because Microsoft's co-founder named Bill Gates thinks artificial intelligence is, and I quote, as fundamental as the creation of the microprocessor, the personal computer, the internet, and the mobile phone. It essentially opens up avenues for multiple multi-trillion-dollar markets, and Palantir Technologies is going to be involved in at least one of those multi-trillion-dollar markets, meaning that if you get into this company now, if you plan to hold this company over the next 5 to 10 years, this company really could make something of themselves. And since they have 3 phenomenal catalysts coming up, such as the NHS contract and possible inclusion in the S&P 500, this is just going to add more money into their overall company and stock, thus increasing and inflating the overall share price. Like we said earlier, they have a hold rating on their overall stock, and they're anticipated to release their earnings report around November 6th, while some sources say it could be closer to November 10th. However, I want to bring your attention to their earnings because that's what we want to focus on right now, considering that this company is profitable. You can see that Palantir has outperformed their overall earnings estimates multiple times on multiple various occasions, or at least met expectations. However, there are some other times in which estimates were slightly off. But the best news is that for their upcoming earnings, it seems Palantir Technologies will either match expectations or exceed expectations again, which should fuel the overall share price going even higher. Palantir has grown their overall EPS by leaps and bounds. Just take a look at this. 100%, 150%, and even a 600% increase. This is extremely impressive, and investors should be aware of this, and as we draw closer to their next earnings report, even though it's not necessarily right around the corner, investors should still be very confident in Palantir's overall ability. So with that being said, I would love to hear your thoughts down below about these 3 upcoming catalysts, what you think of Palantir's current valuation, and if you think their current growth rate is strong enough to offset the current premium in which they are trading at, thus giving investors a good buying opportunity. I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents, and I will see you in the next YT video.